We've seen a parabolic rise in Palantir, in SOFI, in HIMS, in Tesla, and several other retail stocks. But in this video, I'm going to talk to you about Shopify. Shopify is the next big retail hit. And not that it didn't used to be a hit, as we can see with this parabolic rise up to $176 and its fall from grace down to sub $25 per share. But I believe that the fundamentals and the technicals are finally back aligned in this company for this company to make a parabolic move back to all-time highs. So first, we're going to talk about the fundamentals. We're going to pull up my valuation analyzer here, where I take 6 distinct valuation tools, throw them all in this, using also the primary one, which is the discounted cash flow, which is my favorite metric to base a company off of, and come in here and basically say, what is the valuation score on this company? Now, I'll tell you, the valuation score on this company, it's a 1. But you need to understand what you are exactly looking at. So when we look at this, we have free cash flow yield, we have PE, and we slightly have PEG ratio telling us it's not a buy. But what do we know about Shopify? Shopify is a giant in the online commercial industry space for people starting their own businesses and selling products and having Shopify Pay, and they're really innovating on their website and really getting after it, to make it a one-stop shop. And just let you know, like, Amazon tried competing in this space with them and they lost. Okay, Amazon, who has stupid amounts of money to be able to throw at something, lost against Shopify. And Shopify has some competition, but they are the dominant factor, and I believe they have a moat in this space. So knowing that, we can now look at and understand that you are buying this company for its massive 20% growth per year. That is why you were buying this company. And they have been doing 20% growth per year, and they're going to continue to do that. And I think even more than 20% growth per year. Because like I said in my post on X, I was talking about, what did we see with Amazon and Apple? We've seen a strong consumer who is spending like crazy. So you have earnings next week on this name, Shopify. What do you think they're going to report? You think they're going to report bad numbers after you had Amazon and Apple, which are the two primary indicators of the American retailer, American consumer spending like crazy, and they're what you weigh against? I strongly believe, because of what they reported, it's going to flow through to Shopify. And I think they get back to 20+% revenue growth. And mind you, all these numbers I have on here, they're all from analysts. As long as I don't believe they're crazy. And I think they're like, very base level and baseline. I believe they can do higher, but I'm just going to put in here what the analysts are saying, just so I can have that margin of safety, that extra margin of safety. So even with that, I'm getting a discounted cash flow rate and an intrinsic value of $116 per share when the company is below $80 per share. So I'm basically getting this at a current margin of safety of 31%, with a 5-year CAGR of 30%, a 10-year CAGR of over 22%, with price targets of $301 and $608 by the end of this 10 years. And they're just growing like crazy. I have free cash flow margin rate of 20% for the next 5 years, and then going up to 30% for the next 5 years, completing the 10-year analysis here. They also have a rule of 40 score of 42. Anything over 40 is really, really good. The higher you go, obviously, like a Palantir, it's phenomenal. But so I'm gonna judge this valuation more so off of the rule of 40 and the discounted cash flow. Free cash flow is king, and having free cash flow in a company especially a company growing over 20% revenues per year and having the ability to increase that coming out of, what some consider was a recession in America, having sky high inflation and also having interest rates as high as they are, and now those beginning to come down. I believe that Shopify is only going to become stronger because of those catalysts and those tailwinds now flowing behind them instead of them being headwinds. Just like I talked about with Mobileye and a lot of other companies, they are now tailwinds coming out of this instead of headwinds. So that's my valuation analyzer. That's what I think on a valuation standpoint. I do hold this company in my long-term portfolio. I believe in it for the long haul, and I think it's a screaming deal right now. So now that we talked about that, let's talk about the trading side of things. So we're gonna pull it up here. We have a beautiful, what is this? 3-year cup and handle pattern. Beautiful, beautifully formed here. We got our cup. We have our handle, and even more so within the last year, we've formed this beautiful bull flag, and we have broken out of the bull flag. We have not retested the bull flag, which I think we could get some like flashes down during earnings next week, on Tuesday. So next Tuesday, we can maybe get some flashes down to retest that. I do believe 80 to 90% of um, 80 to 90% of breakouts do retest at some point. But at the same time, you're sitting on the volume shelf. You're sitting right here on the 9 EMA, and you've bounced off of it now twice. You've come up, pulled back off the top of the bull flag, broken through the bull flag, had this pullback to the 9 EMA here to, today to about, $76 to $78 per share. And now you're having a bounce going into, next week's earnings, and, the market's starting to climb higher. And you have, obviously, that is the first of my high five setup. Yes, it is a high five setup, obviously. So that is your first indicator on the high five setup. You're getting a 2-for-1 deal here. You are getting a beautiful 3-year cup and handle, which has not broken out yet, but is getting very close. The breakout point is at $91 per share. A little bit above that is going to be your breakout point for your cup and handle. But going into a breakout of the cup and handle, you have a bull flag here, which has broken out, and that's about a 1-year bull flag. So beautiful setup here. So that's our first on our high five setup here. Second, we have this nice volume shelf up to the resistance point of the cup and handle breakout of $91, which is from today's prices is about a 14% increase. Third thing up here, we look at our indicators, and we have, sorry, I'm losing track of things. We have, let me pull them up here. We have our MACD. It crossed over the 0 line, MACD blue line over signal line, which is the orange line, and continuing higher. We have our RSI that kind of double bottomed right here at about 35.78 on the RSI, and has made 2 higher lows, and is still RSI over RSI moving average bullish. So purple over yellow bullish. And last but not least, we have our trend here, which is already moved through the sweet spot, continued up here, and is now in the what I like to consider, the it's basically you come up here and you can't go over 100, right? So you can't go over 100, so you have to kind of just like move sideways in here. And that's what this trend will do. So it'll just come up in here. You take it back from where it came up with, and then it had its first pullback. Or actually, I just take it down to the 80 line here, and I say, okay, so as long as we stay above this 80 line and then come sideways and keep moving back and forth, I will keep holding this name. It's not until we have a breakdown on this and one other of our indicators that I would then sell out of the position and just take my gains and call it quits on this trade. But like I said, I'll be playing it on the trading standpoint, and I have it as an investment as well. Bonus, like I always usually talk about with the Williams R percentage. And lastly, let me just go over it all again. We have a high five setup. We have our cup and handle, a 3-year cup and handle pattern coming up to a breakout point. We have our 1-year bull flag going into the cup and handle breakout point. We have our volume gap with a volume shelf on the volume profile. We are over the 0 line on the MACD, and we are climbing higher. We're over the 50 line on the RSI, making higher lows along the way, climbing higher. And then with our trend, we are going sideways now, but we are still up in the overbought area. But again, it just goes sideways. I'm not going to call it the overbought area. I got to figure out what to call that up there. But basically, like I said, just like with the Williams R, it'll just go sideways as the stock climbs higher. As you see right here, starting from November 2023, it was up here in this area, and it kind of continued higher on the price, and then just kind of went sideways. So, bonus, we have our Williams R, and I continue to tell you all this. When you have the Williams R and you have a push higher, when you have a push higher in the stock price, and you have that first pullback, you bring your box to the high, and you set your box to the low. And now in this box, we are going to, again, we're not going to sell until we get 2 indicators, any combination of RSI, MACD, trend, or Williams R going against us. That is your indicator to sell out of the trade. Some other things as well, obviously, just being a trader and understanding the strategy and understanding, how these things work and so on and so forth are very key in the metric standpoint as well. Things that, it's a little bit harder to teach you without, being on over the phone with you, or like on a video call or something like that, right? More breakdowns needed, and more just trading experience and time is needed with that. But anyways, so one of my favorite indicators is Williams R percentage, and essentially you get this pull up, you hit this high, and you could draw. I usually always just right off the bat draw a red line across to the highest high and a green line down to the lowest low, and those are your kind of like bounce points. And so you have this touch up here, and then a pullback, and then this right here is going to be your it's going to be your support. So your Williams R is creating support, just like the price of stocks create a support, and the candles create a support, right? Support and resistance. This is going to be your support, and as long as we move in here, just bouncing back and forth like a crazy person in a room, we're just going to keep bouncing back and forth. But during that time, the stock is going to continue to go higher. It'll continue to go higher as we bounce back and forth in between here. And also it'll continue higher as we bounce back and forth in your stochastic down here. You're going to get the same thing at the same time down here in the stochastic as it moves sideways above the 80 line, just kind of going back and forth as the stock continues to go higher. Okay, so let's review. I believe this is the next explosive retail stock, just like Palantir, SOFI, Tesla, HIMS, and many others that I'm missing. Retail keeps on hitting it right on the head like every single time. Not every single time, but they keep hitting it on the head over and over and over again. And it's because we don't have anybody to answer for. We, like with our portfolios, we think logically about our investments, and we really get after the brass tacks of things, while Wall Street's worried about other people's money, how they're going to think about an investment, right? All these different factors. Like when you have a billionaire's money in your hedge fund, and you have some of these smaller names that no one knows of, like a HIMS or a SOFI or even Palantir before they really came on strong this year. to tell a billionaire, like, they look at their portfolio, like, what's this Palantir or this HIMS stock? Like, what do you have me invested in? That could be the hedge fund, losing a client, right? So you got to understand these things when you think grand scheme and big picture. So that's why retail is able to, invest in companies like these and, hit them on the head, because you look at the fundamentals and then you look at the technicals and everything's screaming it's a buy, but then Wall Street's just going to be behind the ball. And you see with Palantir, when Wall Street finally gets on the ball, they are late to the party and they are just cramming into a very small room with whatever stock it is. And the Wall Street at the top and the hedges, they're sheep. They follow each other everywhere they go. So it's like if everybody's going into Palantir, and it's a small room, then all those people are going to cram into that room along with each other with Palantir, and then the walls are going to bust down, and then you're going to have a move up to $50 plus. So you see how these things work. Shopify was a darling, and then it had a fall from grace, and now Wall Street again is lagging behind, while retail investors are continuing to scoop this stock up because they understand the massive growth with it, and they understand the technicals are lining up, like I'm showing you here. So final recap before I let you guys get out of here for the day. Market just closed. It's 4:14 my time, so market's just closed here on the East Coast, and yeah, I'm excited for some more earnings tomorrow. And, obviously we got the big presidential election tonight. I don't think it'll be, I don't know if we'll know tonight. It might be weeks. Hopefully not. Let's get this thing over with is what I'm saying. So, but let's recap. High five setups, strategy setup. We have our 3-year cup and handle. We have a bull flag going into the cup and handle breakout. We have our volume profile gap. We have our support line down here on our Williams R that we need to just hold onto. And remember, there's a weekly chart. So if it does break down beneath, if it's Monday, it always has, Tuesday, Wednesday, Thursday, Friday to get back up in here. So the longer it stays down here, say Thursday or Friday, it's probably time to maybe look to exit because it's probably going to stick, right? Bullish MACD, bullish RSI, making higher highs, bullish going sideways, continuing higher on your stochastic and your trend. So we have a high five setup and we have a buy, in my opinion, and a fair value on this company of $116 per share, which is a 32% margin of safety. So that's how I'm looking at this. I've nibbled into some shares today since we've already broken out of this bull flag. The measured move for the cup and handle is going to be $159. The measured move for the bull flag is going to be $129 per share. And a perfect example of this Williams R going sideways, sorry to keep on getting off track, but the perfect example of this Williams R, if you see up here and you just draw this like that, you could have got in this as it was going sideways. Let me zoom in. You could have got in after this hit this base, right? So it set this, bottom here. Or you could even have done it right here. I would actually have done it down here. Just give yourself a little wiggle room. So down here, it shoots up. You have this huge launch off earnings. And then you could have said, man, earnings are really good. I like this company fundamentally. Then the next week it sat there and made a doji candle right there. And then, but at the same time, you had crossed bullish on the trend. You've crossed bullish on the RSI, and then the week after you cross bullish on your MACD. So then you could have got into it, climbed or stayed in it, went sideways here until you had this breakdown. You have this breakdown of your previous support on the Williams R, which is screaming, hey, it's probably time to get out of here, right? You had this big red candle come down here when you had this breakdown. And at the same time, what'd you have? You had two other indicators. One, your trend, your stochastic, and your RSI telling you, hey, guy, it's time to get out of this name. And remember, your MACD is always going to lag behind your RSI and your trend, just so you know. So yeah, we have a high five setup. It's fundamentally looking great going into earnings. Be careful going into earnings, obviously. I know we've been hitting it a lot recently, but earnings they could be absolutely anything. We don't know. Okay. Like they could come out and just have a big dud. But we got to look at all the probabilities on the table. All the probabilities are telling us what? We are going higher. All the fundamentals are telling us what? We are going higher. On top of that, Amazon, Apple crushing earnings, having great consumer growth, consumers just buying like crazy, and consumer spending coming out of this high inflation environment, and now interest rates are falling. Consumers are spending. Everything's looking good. Looks like we're going to get that soft landing. So you got to take all that in consideration. People are going to start spending up more and more businesses again, and things on Shopify are just really going to start taking off again. And you're going to have tons of people buying off the site and selling on the site, and they have a great company. So all the buyers pay to buy off of there, and then get use shop pay and everything. But then also all the sellers have to pay, including like big ones like Nike. They pay to use their site and sell their products and all their little AI tools and everything. So it's a great business in my opinion, and they're not going to be disrupted. I'd say they're probably second in e-commerce to Amazon as a play. So I'm really excited about it. Like I said, I nibbled in some shares here. Got a couple options at the $90 price range, but I have them put out for. Let's just see the measured timeline of this bull flag is going to be 329 days. So let's see, we're looking at August 2025. So yeah, I bought some shares. I'll be looking to buy some options, and yeah, it'll probably be for this measured move is 129. So I'll probably be looking to buy these options at $90. I think I did buy an option already. I have to check. I think I bought one for 90 for February or March, I believe. So, but I'll probably add more. Probably, yeah, I like the February, March. It gives us a couple months, and we're right there. So I'll probably be doing that. Yeah. So I really hope you guys appreciated this full breakdown and what I think is going to be the next explosive retail stock. Tidbit for earnings review: if they come in with if they come in with over 20% revenue growth, the stock is absolutely going to go parabolic over the next and for the next 3 months. I'll just tell you that right now. I said the same thing with Palantir. I said if Palantir comes in with 30% plus revenue growth, they're going to go parabolic. What they do? They went like up 13, 14% after hours, and they've already had a huge, huge, huge climb up. So I'm saying the same thing. If Shopify comes in with some crazy, awesome growth numbers when they're only expected to be around 20% every year, and they come in with like 22 to 25%, the stock is absolutely going to fly, because it's showing investors like, oh my God, this company is getting back to like hyperbolic growth, right? So awesome. Well, hey, I really appreciate you all. I hope you have a great rest of your night. Enjoy watching the elections if you're going to. Don't get too caught up in it. It's going to be okay. Everything's going to be okay after today, no matter who wins. And I hope you guys have a great rest of your day. And let's keep pushing strong and growing this community, and helping each other out, and teaching everybody that doesn't know how to trade. So look forward to the next one, everybody. Have a great rest of your day.